2020 was a challenging year for many businesses, including Greenbrier. We entered the fiscal year experiencing a cyclical downturn in the freight rail industry, but the COVID-19 pandemic presented additional and novel challenges. At the onset of the pandemic, customers deferred capital spending, which exacerbated pre-existing business impacts created by railroad operating initiatives, increased railcars in storage, weaker railcar loadings, and lower energy prices. Greenbrier's designation as an essential business has allowed our frontline production employees and critical support teams to maintain operations throughout the pandemic. It was crucial to modify our work methods to keep our entire workforce safe and socially distant. So we launched several initiatives to mitigate COVID-19's impact on our business while keeping our employees, suppliers, contractors, and communities safe and healthy. We ended the year with robust liquidity, a strong backlog, and increased market share. All of this strengthens Greenbrier's financial position entering fiscal 2021. Today, we are better prepared to weather this down cycle in our industry than any before it. In order to meet the demands of 2020, Greenbrier's expense structure was aligned to meet current demand. Among the most difficult cost containment measures we undertook was to suspend work on 13 production lines during the fiscal year. This resulted in a global workforce reduction of approximately 40% as we adjusted our operations to meet current business conditions. We set, and by the end of May, achieved a $1 billion liquidity and cost reduction goal. Adjusted net earnings were $70.2 million, or $2.10 per diluted share on revenue of $2.8 billion. Greenbrier ended the year with a cash balance of $833.7 million. Greenbrier's dividend payments in fiscal 2020 were the highest in our history, producing a dividend yield of 4% at the end of fiscal 2020. In the fourth quarter, Greenbrier's board of directors declared a dividend of 27 cents per share. Our one-year total shareholder return was 22.2%. We ended fiscal 2020 with nearly 22,000 railcars delivered, the second highest in our history. During fiscal 2020, we also received orders for 16,600 units worth $1.6 billion, with 40% of these orders originating from geographies outside our core North American market. As the Greenbrier Manufacturing Organization, or GMO, reduced operations during fiscal 2020, adjusting for lower headcount, GMO demonstrated significant year-over-year improvements in our safety performance. Facilities acquired from the 2019 acquisition of American Railcar Industries, or ARI, are now fully integrated and are making positive contributions to our overall performance. We achieved our synergy goals despite the impacts of COVID-19. Marine barge manufacturing continues at Greenbrier Gunderson, and orders have been secured through April 2022. Greenbrier Management Services supports approximately 400,000 railcars and facilitates operations on almost every Class 1 railroad. The business unit continued growing its customer base in 2020. Our leasing unit ended the year with a lease fleet of 8,300 railcars and a strong fleet utilization rate. Our capital markets business grew, contributing to our financial performance. Wheels, repair, and parts leadership spent the year focused on increasing efficiencies in preparation for fluctuating demand as railcars are pulled from storage in fiscal 2021. Greenbrier Europe achieved profitability by the end of fiscal 2020, and its long-term business outlook is positive. Greenbrier Maxion secured strategic orders as the Brazilian market improved. We honor the trust placed in us by employees, investors, customers, suppliers, and our communities. In fiscal 2020, we made new commitments to our enterprise-wide environmental, social, and governance, or ESG strategy. For the first time in our 2020 ESG report, we disclosed our greenhouse gas emissions, waste management, water usage, employee diversity, and other important metrics. In 2020, we more fully articulated our commitment to diversity, equity, and inclusion, or DEI. We have named our DEI commitment IDEAL, which stands for inclusion, diversity, equity, access, and leadership. We have made important strides in fiscal 2020, including adopting benchmarks to measure our DEI performance and linking progress on these benchmarks to compensation of senior leaders at Greenbrier. Our work in this area will continue in fiscal 2021 and beyond. We launched our Virtual Sample Railcar, or VSR program in March, which quickly gained traction with customers. This live streaming program allows Greenbrier's customers to view and inspect railcars without requiring travel. VSR brings further innovation to the way Greenbrier builds and delivers its products. Greenbrier is well positioned to succeed in today's economy and our core markets. We remain optimistic that we will emerge from this time of uncertainty as a continued leader and innovator in the freight railcar market.